right, so we back this morning. What's today's date? Okay, December the 16th. Staying dedicated and committed and consistent. My goal is to be in front of the market every single day, man. Even though I got to wake up early before I go to work, it's currently I'm waiting for the market to open for London. So it's 2:58 a.m. Eastern Standard Time. So I'm trying something different. Not that much different because I'm still working out kinks to my strategy, right? And one thing I've seen from a lot of great traders, and one of the traders I really, really like is a guy named Oliver Velez. He has a wealth of information on YouTube. I'm pretty sure he has some books. I haven't read any of his books. However, he almost every day it seems like he has posts or new videos, right, showing up on YouTube or popping up on his channel. So his name is Oliver Velez. He used to trade on Wall Street. I think he's living in Colombia now, something like that. But he has some really good information. So, and some other great traders too. But older traders who have been in the game for 20, 30 years, some of them for the most part, they talk a lot about keeping your trading as simple as possible. And so I don't like a lot of lines on my chart. I learned that a long time ago when I was trading with IML when I first started trading Forex years ago, like during the pandemic. I wasn't as consistent though. I was trying, but I don't know. They didn't really have a lot of great teachers. I don't really have anything bad to say about IML because a lot of people started that way. And that's how I was introduced really to trading from the aspect of charting and then just taking it more serious and seeing what type of money can be made. So, but keeping things as simple as possible. I like my charts as clean as possible. I really only would like to trade with just one time frame. So I don't know, man. I love the 5 minute, and I was looking at the 15-second, 30 seconds, and smaller time frames for entry. But then going back looking at some data, some back testing, I'm like, man, well, everything is pretty much still based off of the 5 minute. That's my main time frame. Why don't I just trade off the 5 minute? And one of the reasons was because I have to stay in the trade longer, and I really only have like 2 hours at the moment from 3 to 5 before I go to work at 6. So, and if I have to be in the trade longer, then I probably will have less opportunities. But for my trading style, which is mostly pullbacks to the EMAs reinforced with support and resistance levels, or rejection from support and resistance levels, then I guess I only need like 2 or 3. For the most part, that's what I expect to get within my time frame anyway. Maybe 2 to 3 opportunities. It seems to be about 2, but I don't know. So I'm going to go back and forth, I guess this month, between just using the 5 minute in general or also using smaller time frames to enter. I'm not sure just yet, but I would know after I get more data and see what my win rate is. A month probably won't be long enough for me to make a complete conclusion. Maybe 60 days, maybe 90. but I know I have to get more data and more reps. But I like the 5 minute on crude. It seems to respect the EMAs a little bit better than some other instruments. Like this morning, I was playing around with. I was just looking at some other instruments too, like silver. I was looking at Nasdaq, looking at S&P or ES, looking at natural gas, looking at soybean, looking at copper, looking at Bitcoin. What else? That might have been it. And just seeing how they look in general, right? Because and how they respect the EMAs, and how they trend or how they don't trend. Do they consolidate more? And I've learned that all instruments don't act the same. They don't trend the same. They don't move the same. They consolidate more or consolidate less. And also, throughout different parts of the year, things might change. So I know a lot of people, when you are just starting trading, right, you don't really know what instrument you should even be trading. And I will say, I think a good idea, a good way to look at it for new traders, right, is to make a list, maybe 5 to 10, I don't know, 6, anywhere between 5 to 10 instruments, right? The main instruments, the main futures. And you can put them on just make a list of them and just look at the charts for a while, maybe, for a few days or something. And then get a piece of paper and jot down which ones stand out to you the most? Which ones do you see patterns with the most? Which ones seem to move cleaner for you? Right? Because some of them are just like, it just look like a whole bunch of noise. And then some other instruments are like, okay, I see it's still noise, but it might not seem as noisy to you, right? And so because of that, you might see something and that might be a better instrument for you, right? Not necessarily you're going to go with the instrument just because of that. However, it's something to look at. It's something to write down, and then you can go see, does it have enough value, and also how does it move, not just in general first, and then also the time frame that you plan on trading in, because it might move differently in that time frame. So that's something important too. But I would say just make a list of them, like I said, 5 to 10, and find which ones seem to just stand out to you. It seem to move the cleanest to you, where you can actually, it feels like you can actually see some patterns, or you can just, you can see a trend. You can. I guess the best way I can say is which one seems to move the cleanest, man, with the least amount of noise. Pick that one, and you can start with that one. And then start looking for certain patterns, just looking at it. Like, I like using MAs. I'm not big on any other um, indicators. I do like the EMAs, and I pretty much I've seen EMAs before years ago, but it was mostly dealing with EMA crosses. And so a lot of people might come across that initially or learn that, but oh, I'm sorry, yeah. So, but when I was listening to Oliver Velez, he gave me a different way to look at the EMAs. And then I started seeing some other traders talk about it in a particular fashion. And so I kind of look at the EMAs as a place where you can start to make a decision, right? Instead of just looking at a totally naked chart, unless you're just going to look at consolidation areas. But I look at the EMAs and say, okay, well, this is a place where, okay, I can take a look at and see how prices react there before I make a decision. Almost like a stage or just a foundation, instead of just looking at a chart and just jumping in anywhere because I think I see something. And so far, it seems to be, I feel very comfortable with it, right? But price action, volume, and not many indicators. It's another volume indicator, the fixed volume price range, right? I like that. That seems to be beneficial because volume is involved as opposed to just lagging indicators that are based on volume and price action anyway. So, but anyway, this big pink line right here, right? This one is off of the daily. So I looked at the daily and drew one level that caught my attention. Then I went to the hourly. Well, I pulled all three charts up anyway. Let's see if I can show y'all, right? Let me clear this. Hold on, no. Let me close that on my ruled crude, and then I pulled these up. This was a 1 hour. So let me put this on the daily. So the top right chart is my daily chart. And so what price is currently at on a 5-minute is it's at a significant support level. And this level has been touched all the way back to April, one time, two times, three times. Now it's being touched the fourth time on crude oil, right? So it has definitely has some real significance. And each time it wicked, it might have broke through it slightly, but it was just a wick on the 5-minute, on the daily candle, and it went back up. So that's what I'm looking at today. Could it break it and drop below it and continue? Possibly. But if history is, which history is the best indicator we have moving forward, then it will show on the fourth time that it might do it again. It might reject it again. So I'm not tripping. I'm looking at it. I see it's breaking below on the 5-minute, but I don't know. I'm just not. That's not what I'm looking for. I'm not going to take it because of that. Plus, I don't really take breakouts. I take pullbacks, and I take rejections from levels. You know, as long as I get a good indication, right? If it halts at let's say like, if it halts at a level, it will consolidate there. But if it doesn't consolidate for long, then let me go back to my regular one. All right, so like this first touch here, you can see on my chart, right? Let me make it a little bit larger for you guys. So here, right, price came down to the same level. This on a 5-minute chart. It consolidated. Now, in that aspect of a consolidation, then I would draw like a box around it. And then let's say if price broke back above it, then I might take it higher. But that's a small consolidation, which I still look at as just a rejection, as opposed to like this level here. Right? This consolidation, I won't take a breakout necessarily from that. I found that consolidation breakouts for me, I'm not that good at. And I'm also just trying to stick with one entry, right? One entry for the most part, and master that before I add anything else. Instead of just trying to take breakouts and take pullbacks and whatever else it may be. Let me just master one thing, one instrument. I would like to just deal with just one time frame, ideally, and then one entry, right? One strategy. Keep it as simple as possible. That's my goal. And then once I do that, try to simplify it even more if I can without damaging my whatever success I already have. Right? So just trying to simplify things as much as possible, so that even I can teach it to a kid. Like they say, it should be. They say it should be as a simple. It should be simple enough that you can teach a child. Maybe not a child, but a teenager, I guess. But I do switch back and forth between. Let's say if I'm on 5 minutes, like right now, I'll switch back and forth. You know what? I should just drew a zone. Let me. Matter of fact, so I won't have to switch back and forth. Let me go back to daily. All right, so this is my daily. So I'm gonna draw a zone on this so that I have a good indication and I don't have to keep switching back and forth. Yeah. It's a wide zone, but hey, that's pretty much what it is from the previous touch. And then in the touch before that, they went even further below that support level, but I'm not gonna draw a zone that wide. So I'm gonna keep it right here. And we're gonna go back to the 5 minute chart. We're gonna bring my price into view. Oh, it's another thing too, right? So when I was thinking about not trading or entering off the 5 minute, looking for a smaller time frame to enter in, let's say like a 15-second, 30-second or something, it's because two, I can have a smaller stop loss. But it also leads me to more confusion because I have to look at this chart, look at that chart, and it causes even more mental fatigue. So, like for example, right now I'm going to use a 6-tick stop loss. That's pretty much double what I would use on a 30-second or 15-second. I would probably use like a 3. I was using a 3-tick stop loss, and that pretty much I feel gave me enough. However, it could be a little more because I like to put my stop loss above or below the candle that I entered on. So if I entered towards the downside, then I would like to put a stop loss above the candle, right above it, if I'm expecting price to go down. However, if I'm expecting price to go up, then I would like to put my stop loss below it. But sometimes the candle might be larger than just 6 ticks. But for right now, I'm just going to use 6 ticks and then modify moving forward. And I won't look for a 1 to 4 or nothing like that. I have a 1 to 3 already in my bracket saved. So when I enter on a one click entry, I just push the button. I don't have to adjust it, anything like that. It's going to pop up with 6 ticks stop loss and 18 ticks take profit. I can adjust it afterwards though. But if that's too large moving forward, once I get more data, I'm thinking maybe a 2.5, but I would like to keep it 2.5 at the least. So, and still try to get to a 60% win rate. Well, we gonna see. That's the goal. Mm-mm-mm. Yeah, but this might have been actually like a little pullback into this 20 EMA right here too. Because the pullback, truthfully, I'm looking at it. Because even this area right here, I'm gonna draw a block, right? Let's say right this area, right, consolidation. A lot of times I realize, so let's say you have an area of consolidation and you see price broke below it. Right, so this area of consolidation here, where's my arrow, man? Add that to my icon bar up here, right? So this area right here, consolidation is tight, right? So I found a lot of times, we're gonna see in a second, I'm gonna show y'all something, right? That I would draw, you see price broke below that and it came back into it. I see a lot of people, they might draw their stop loss, not stop loss, I'm sorry, but they level right underneath this, like this. They might draw it underneath that consolidation right there. Let me make that a little darker because I don't like that. Let's go with this. All right, so they might draw it right underneath it. But I found a lot of times I like to draw mine. I might draw underneath it also, and then I might draw a second one right through the middle, like that. And a lot of times price does come back, maybe not to the bottom of that consolidation area, but to the middle or close to the top. But then there's also a tool called the fixed range volume profile. So if I draw that, this is just based on volume, where was the most amount of contracts traded, the highest amount of volume, right, in contracts during a certain point. So I draw it from the end of the box to pretty much where price started to consolidate. And then you might can't see it that good, but there's this orange line in the middle. And I'm going to draw right here. I'm going to place a level right on top of this orange line. Right? And so that's pretty much through the middle almost. And you see price came back up to it, stopped at it, and then rejected. So I do use the volume with the fixed range volume profile. That's something you guys can look at too. Watch some videos on YouTube about it. But I was late this morning and I'm still warming up, right? And so that was a pullback. That pullback started at 2 and some change, right? And I'm just coming to the market. So I missed this pullback. Either way, I still should have saw it. But hey, we're getting better at it. but pullbacks are pretty much my entries. But this is a pullback. Look, price broke down, came back up, stopped at where I just showed you guys, and then broke right below it. So I could have just put a stop loss here. What I could have did, I'm sorry, not stop loss, a level, another level right here. And as soon as price broke below it, boom, the price came back and wicked. Right? So if I would have got in, let's say about, knowing me, probably about right here, and let's see where I might would have got stopped out. All right, so I wouldn't have got stopped out because with a 6.6 tip stop, 6 tick stop loss, I wouldn't have got stopped out. Yeah, so I would have. Right, so another missed opportunity, right? That's my fault. Maybe I'll come to the market about 245, moving forward. Yeah, yeah, I could have took that. Yeah, but I wasn't even in front of the market until 3 o'clock. Yeah, that wouldn't have been a good entry anyway. So I couldn't have took it. But maybe I try to come into the market now, probably about 245. I was already thinking that anyway. Okay, so I missed that opportunity. Cool beans. Mm-mm-mm. No, I'm not gonna be greedy. I'll keep it at 3. Uh-uh. Cool, cool, cool. So since this is the fourth time that price came down into this particular zone and rejected, well, this is the 3 times previously it rejected from this area. This is the fourth time, so I'm looking to possibly, we'll see. Hopefully, I can get another either pullback coming back down or a rejection from this level, and then price reverses and goes back up. But I'll say, if I get another pullback, I'm hesitant, right? I'm probably still gonna take it though, so that I can get the data. I realize you can't be afraid of taking losses, man, because you're only gonna know what works and what doesn't work if you take wins and take losses, and then over a certain amount of time, a few months or a certain amount of trades, then you get an idea for, okay, do I have an edge, and, and what kind of edge do I have? And because I know what kind of edge I have, because of my data and my experience of losses and wins, let me go ahead and take this trade. I know this trade has roughly a 50%, 40%, 60% chance of going in my favor. So that's another thing I have to get over. Like, I don't know. I don't like to be wrong. A lot of people don't like to be wrong. So maybe that's a pride thing. I need to work on that because it definitely shows in my trading. Right? And also maybe some deep-seated fear for a lot of people, and also even myself, right? Just dealing with the psychology of it, which is really, really, really big when it comes to trading. The fear of losing money, even when you don't have that much money on the table, but still, don't think about what you can lose, think about what you can win. And price dropping, man. That's crazy. That's okay. Oh yeah, but if it pulls back, I'm a little hesitant because I know price also rejected 3 previous times from this particular area. So this possibly could be the fourth. But we'll see. But I know it'll pull back eventually. And we'll see what it gives me, right? So I'm expecting if it pulls back, pull back up. If it pulls back up to this kind of pinkish line right here, and at that particular area, it's or at least pretty much close to it, and it also meets this yellow 20 EMA, then I probably look for another trade towards the downside. But we shall see. I think I get another chance to take a trade before 5 o'clock. Mm, okay. Mm-mm-mm. Yeah, that is a wide zone though, Tom. So, mm-mm. And also learning to be patient, very patient, and waiting on your setup. That's it, man. And then not over trading, man. A lot of people trade way too much. I realize forcing trades, forcing setups, seeing things that really aren't there, and really not having a clear idea of what a really great setup is. Seems to be a big problem for a lot of people. Another thing too, man, that y'all can do is just write down what problems you feel you have. Right? Let's say like, okay, I overtrade. First, you got to understand what overtrading is. So some of the greatest, I ain't say the greatest, but some good traders I heard speak online kind of gave me a better idea. Like, yo, in their session, maybe they trade 2 to 3, 4 trades. Some people trade more, but it was a guy. I wish I could find it. I should have saved it some kind of way. I don't know. But he was talking about from, I think it was like a trading challenge, and some of the greatest traders, some of the best traders who were like at the top of the list, they traded the least amount of times. Like maybe they would take 7, 8 good trades in a week out of 5 days. So that's like out of 5 days, if you're taking 7, 8 trades, that's less than 2 trades a day on average, right? 1.5 or something like that, I guess. And even if you take 2 a day, that's 10 trades in a week. And then he was saying that some of the traders who traded the most, on average, the traders who traded the most had the worst stats, the worst win rates, and the worst profit margins, or no profits at all. And so that's something you should look up to. How many trades on average is too many trades to take in a session for whatever particular instrument? And of course, the answers are going to vary, but I would say find some good traders so you even have an idea. Because when I was with IML, I didn't, I don't even remember them even really talking. I mean, they talk about setups, but I don't know, man. I can't really remember them talking about like over trading per se. Because some people take 6, 8, 10 trades. Of course, commissions are going to hurt you too because you have to pay a commission every time you enter and exit a trade. But so that matters. And then just a lot of times it's not going to be that many great setups. And so a lot of times I realize it's better to do nothing than to take trades that aren't really, really good trades and lose money, you know. And then also affect your psychology because you keep losing and you start to feel like a loser, hopeless, that you can't do it. But it can be done. So I would say write those things down on a piece of paper and get your journal. Like this TradeZilla. mm Then you can go in here, you can jot down all type of stuff about your trade so you can go back and look at it, review it. But like over trading, not respecting, not getting out when you should, not putting in a stop loss, moving your stop loss, coming into the market stressed, not at peace, not fully focused on the market. Now you write those things down on a piece of paper, and then let's say for one whole week, ideally until you fix it, but 1 week, maybe 2 weeks, you focus on that main thing until you get that finished and get that fixed. So over trading is a thing. You say, okay, I'm going to take no more than 4 trades a day or 2 or whatever it may be. Period. That's what I'm going to take every single time I come in the market. I'm not going to ever take more than maybe 4 trades. So for 2 weeks straight, that's all you're doing, and you keep working on that every day. You look at it before you get into the market, so that you'll have a good idea and have it at the forefront of your mind, and then you can work on fixing that instead of just keep having all these thoughts in your head. You got to put it on paper. It's not real, like they say, until you put it on paper. So, and shit, that can carry over to other things in your life. Like, if you have bad habits, keep working on those one at a time. Knock it out. Okay, 2 weeks or for a month. Replace it with a good habit. Okay, doing. Then work on something else. Work on fixing that. Just eliminating bad habits. Instead of trying to do more, try to do less. Or replace the stuff that you are already doing with better habits. And same thing with trading, right? So mm, mm, mm. Damn, missed the opportunity too. It's okay. But even when I miss opportunities, right, it still fuels the fire because if I see the trades that I should be taking, even though I missed them, if it's because I didn't come into the market early enough, sometimes I can't change that, but I can get in front of the market at 245. Or fear, hesitation, those things, you know, I definitely can fix. My time in the market is my time in the market, but I can't get in front of the market about 245, 250. But other things, I can definitely work on correcting those. Hesitation might take a little time. Fear, right? But we can overcome all that. That thing dropping too. It's crazy. I wouldn't have caught all that though, because I'm sticking at my 1 to 3 or 1 to 2.5. I don't want to get in the habit of chasing, because then the next time I might chase and then it pulls back and then oh. And then sometimes, certain instruments, they only allow for a certain range of movement. You know, you can expect, sometimes you can just expect too much out of a trade on a regular basis. You think you're gonna get a 1 to 5 every day. Yeah, that's not gonna happen. It happens from time to time. Even if you see, oh, that moves this time and moves that time, you know. But depending on the time frame too, like you're gonna have more volume in the daytime, but you're also gonna have larger candles and larger moves, so you might have to have a wider stop loss. So you have to find that sweet spot and don't worry about the money that you left on the table. Just worry about your goal. You know, 1 to 2, 1 to 1.5, 1 to 2.5, 1 to 3, 1 to 4, depends. Mm-mm-mm. Let's see if it rejects from the bottom of this zone. It's looking like it. We're gonna see in a second. I see a green candle starting to form, and I see a long wick too, right at the bottom of this yellow zone right here. Mm-mm-mm. Then a lot of times, what I was working on, what I did, well, last month, um, was even if I know it wasn't a good trade, it sounds stupid probably. I will still take it sometimes if I feel that I have fear of losing some money. I still take it. Like, you know what? Let's say like this: if a 5 minute green candle develops and the next one rises above it, then I just take it. Right? And that's not really my strategy per se, but it's still a rejection. Off of not necessarily a level, but it's a wider zone. But I would take it to force myself to not worry about taking a loss, to get over that, because that's just that's part of the cost of doing business as a trader. Just like with any business, you have to buy supplies, you have upfront costs, right? You have to invest in it. How long before you recoup that investment back? Even if you get a degree, let's say a degree is 50,000, that's an investment. You still have to break 50,000 before you recoup your initial investment and break even. Right? It's the cost of doing business. It's the cost of getting a higher education. Taking losses, it's the cost of doing business. But ultimately, it's still not a loss if you win overall. So if you take a loss for the day, but during the whole week, you still took more wins and losses. Your profit is up, then it's not really a loss. It's like you win a few battles, you lose a few battles, but you still win the war. Still won. Mm-mm-mm. I might take a small scalp off this just because I just want to get in the habit since I'm rusty, since I didn't trade all last month. But if I would take it, I'd take it for like a 1-to-1, which really ain't my strategy, which I don't plan on taking things that aren't my strategy. But to get warmed up and to get alleviate certain mental habits that I want to break, sometimes I will force myself to take a trade so that I'll get over fear of just trading in general. Because it's just like with anything. The more you do it, the better you becoming more comfortable. And it's almost like second nature. And it's a difference from me not trading just that last month. I can feel a difference. Right? I'm not as comfortable getting into trades. It's a level of hesitation there. I don't like it. And hesitation, I feel, sometimes it does just stem from caution, but a lot of times it can also stem from fear and being self-aware of knowing exactly and knowing exactly which is which. Is being honest with yourself, right? And self-development. That's growth. So being truthful with yourself. Let me see something. So I'm forcing myself in a trade, right? It's not a trade I probably would normally take, not necessarily, but if I did, I would have took it when it broke, probably about right there, and I would have had a better stop loss. But I just want to see something. I'm still just getting data, but I've been thinking that mostly my trades, my entries, will just be pullbacks. I like those better. And if it happens, but to pull back into a level and to my EMAs, that's really what I'm looking for. It's like double confirmation almost for me. So I don't know though. But it's only really two areas that I enter from anyway. Is a level, and that might be rejections. All right. It's a level and then also the EMA. EMAs and then levels. Now, what I could just keep it to the point where I only take EMAs only take pullbacks and no reversals at all. Like this entry right here is entering, believing that price is going to reverse at least back up to somewhere up in here. But I might, but that'll leave me with 2 entries instead of just 1. You know, if I just trade all pullbacks and master that, that might be more beneficial. And I have to get more data for me to make that decision. But that's kind of what I'm leaning towards. You know, become a master of one, and well, not a jack of all trades, but just a master of one before I move on to anything else. Mm-mm-mm. Mm-mm-mm. Also, too, learning to sit in a trade because you see the price going up and going down. That creates anxiety. So you say you're going to get out of the trade here, not there, but you don't. You get out prematurely because, and not necessarily based on anything technical, like you actually see price stalling out or something like that. It's just the longer you sit and see price going up and down, fluctuating, creates anxiety. And so because of that, you can't sit in that discomfort. And so you get out, you know. I'm only going for a 1-to-1 right here. Yeah. So let me pull this down. Probably about right there. I don't know. Let me see. Is that a 1-to-1? Mm-mm-mm. That's roughly a 1-to-1. That's a little bit over 1-to-1. But it might just go back against me and stop me out. But I would like to see it pull back. Ideally, my thoughts was it's pulling back up in here and get out. And then if it gives me any other indication, I'd take it back down. But yeah, but the way it's stalling, I don't know. But I was listening to Oliver Velez, and he was saying, man, that guy shot, man. He was just saying, right, when it comes to trading, a lot of times people just don't give it enough time. You're trying to learn a skill set where you can make money anywhere in the world from a computer and an internet connection, right? You don't have to do business with a person. You don't have to buy product. You don't have to work on your salesmanship. You don't have to run ads. You don't have to deal with shipping, returns, supply channel disruptions, tariffs, geopolitical destabilization, lack of supplies. What else? I got out $40, right? Probably could have kept it, but I just got out now. So I ain't feel like staying in that trade anyway. Then I'm saying it's taking a while to reach this EMA. EMA is coming down, but price is kind of stalling up in this particular area. But oh yeah, so like you were saying, you don't have to deal with any of that. And when it comes to scaling up, you can scale up pretty easily. Once you learn the skill, you got the skill set. Then the market might change a little bit here and there, man, but you learn the skill where you can make money from anywhere in the world. You don't have to be tied to a desk. I drive trucks. You don't have to be behind a big rig, 53-footer, big dumb truck, right? Or a box truck or whatever, you drive in class B, class A. You don't have to deal with that. Right? And you expect to learn that in 6 months. You expect to learn a skill set that a small fraction of people are actually successful at. That brings in billions and billions of dollars, maybe even more a year. Wall Street, London, other big areas, right? Chicago, CBOE, Chicago Board of Exchange, all these places where they trade. And you expect to learn that in 6 months. And he just helped me get a better realization of what the truth of the matter is. Even to, I don't know what to be a doctor. Was that 8 years or something? I mean, don't quote me, but a lawyer, 8 years, like really skilled professions. It takes continuous learning, so does trading. Make 100-some thousand, 200,000, 300,000, depending on what you specialize in, right? But then you have engineers, 4 years. Some of them can't even get a job now. It sucks. I feel sorry for them, right? The way that the economy is going. Same thing, nurses, 4 years, 3 years, maybe longer, depending on how long it takes for them to finish their degree. $80,000 in debt, working a whole lot of hours, and they have to be stuck in that one place. And you expect to learn that in less than a year. Now, it can happen, but let's be realistic about it. And so when he put things in that perspective, I'm like, yo, that's a hell of a skill to learn. Let me think about things differently and just continually be a student. Like, it was Duncan, ZZ Duncan. I forgot her name, but she was an Iron Male. And she said, I always be a student. I think that was their slogan too. But I said, you're right, man. Let me look at it differently. Because I will say, trading is a hell of a skill. If you can learn it, and especially even now too with prop firms, and you don't really have to expose your own capital, well, a large amount of your own capital. Man, that's great. Then once you learn, you can just keep scaling up. And if there's a recession, unless the world ends, I guess the market will still be there. So it doesn't matter if it's a recession, if the market is doing good. I mean, if the economy is doing good or doing bad, you can still go into the market. Recession proof. That's a hell of a skill to learn, man. And you just got to ask yourself, are you up for the task? Because it's definitely worth it, the trial and error. Well, maybe not for some people, but for the pain and suffering and stuff like that. But I think it is. On this channel, it definitely is. So let's see what I got in, I think here. All right, so it might would have reached my 1-to-1 if I would have got out with a $40. I would have only won 60. Six ticks was my stop loss. Yeah, 6 ticks was my stop loss. My profit would have been 6 ticks too. And so you got regular crude, what they call, if you look up here to the left, it's light crude, oil futures, and then you have the micros. There, so the micros, 1 tick equals $1, and on this crude, which I guess should be called a mini or regular crude, that's what I call it. Regular crude, it's $10 a tick. So 6 ticks, that's $60 I'm risking. And I didn't get a 1-to-1. I just got out of it, man. You know, so. But I'm gonna draw another line right here, and I'm expecting price to come up here and pull back to this particular area because this is a small level. This is a small consolidation. That's how I look at it. Price came here. It's stopped right here. Let me pull this. Let me make this a little larger, right? So this is kind of like how I draw. I look for levels, even on smaller time frames. So maybe chart a little bigger too, man. All right. So seeing price consolidated up above, it started to drop. So right here, the bottom of this red candle, right? Boom. The bottom of this green candle. Oh, that's messy. Let me get that out y'all way, man. That's messy. I can do better than that. And take that out the way. Take that out the way. All right. So these two candles, this red one and this green one. The bottom of this red is exactly where this green candle opened, and it closed a little bit above it. But if you can see, price stopped and started right at this particular level on both of these. So what I would do, I look at that and I see price, this red candle, right? So this green doji is sandwiched in between these two red candles. But where this green candle closed at is exactly where this red candle opened at. Now I'm looking to see, okay, where did price seem to stop or interact within several candles? So in this particular area, this red candle here, so this red candle here, you see my pink bubble, this green candle, and then this other red candle. I'm looking at this particular area because price didn't just keep going down. It halted right here. It took a pause for a second with this green candle. Then it started to drop again with this red candle, but this other red candle right here, the wick came up and touched this wick. So now I would draw a line. Me personally, that's how I do it. I'll draw another line right through there, right? Where this wick and that wick is. Boom, right there. This wick pretty much touched it. This wick touched it. This red candle blew past it, came back up, and this wick touched it. So I look at that. So now I'm looking for price to pull back. If I'm going to take a pullback, ideally, price to come back up to this new level that I drew on this 5-minute time frame, and to meet this EMA roughly about there. Right? So they'll probably meet, might halt for a while, start to consolidate, and then then a lot of times it'll drop again. And so then I look for a entry right below the consolidation at that particular area. And that's how I take my pullbacks a lot of times, right? And that's like a double confirmation for me. But 3 previous times, this area, this zone where this yellow is, right? Price touched and rejected. A strong rejection too on the hour and the daily is there. So since price has rejected slightly on this 5 minute, I still gonna take the pullback. We'll see. If it gives me a really good indication of price action, if price shows me a good indication, then I guess I'll take the pullback continuation further down, right? However, because price rejected here, this will be the 4th time. Price might come back down. If it stops right here or just a little bit below it and it starts to go back up, it might be a double bottom. So we'll see. I'm kind of thinking that's probably what's going to happen because on the hour and daily, price touched the same area like 3 previous times, man, all the way back up to April. Strong rejections from it too. So if that's the case, then I might take another. I might take that rejection. I mean, yeah, it'll be a rejection, but it might give me a reversal pattern if it's a double bottom. But ideally, I don't know, man. We'll see. We'll see. We'll see. Because that's a whole different kind of setup too. Right? It's a reversal. It's not a pullback. But those are the two that I use, man. But I would much rather just probably do reversals. I mean, not reversals. I'm sorry, pullbacks. But my thing about that too is like, will that give me enough opportunities? Will that give me the amount of opportunities that I need within my little 2 hours? Now, if I didn't have to go to work until like 9 o'clock, if I had like another maybe 4 to 6 hours, from 3 to 9, that'd be 6 hours. Then I think I would have more than enough opportunities. All I need is catch two really good trades, and most definitely within 6 hours. Right? It's there normally, but I don't know. But I have to start somewhere, so I don't know. I don't know. But I would much rather just master pullbacks. They feel the most comfortable to me, right? So, I'm gonna lock this on here too. Oh, okay. How to get that on there? What's this? I don't like that. And the market is kind of like learning a new language too. So you got to give it time, and take it serious and put a lot of effort into it every day if you can. Just like if you learn Spanish or something like that. And for some people, it takes a long time. Excuse me. It takes a long time to learn the language. Others not as long. Right? So that matters too on the individual. But it's really just like a new language almost. Right? and dealing with market structure, how the market moves. That's very important. So it's different aspects of the market that you need to really get a good handle on, and then you can put it together like the ingredients to a pie. You know, you put it all together, bake it, and then you go. You have a profitable strategy along with the time involved to learn what works and what doesn't work too. So, but the market moves in waves a lot of times. Up, down, up, down, up, down. It's not always straight down. It might look like it's straight down. This on a 5 minute. If it was on a 1 hour, it'd just be one candle. Or 15 minutes, you'd be like, okay, it didn't go straight down. But here, it's going to pull back, go back down further, or either pull back, come here, go back up, then come back down to about here probably, something like that. Go back up, maybe further, come back down, way back down. That's what it does. It might come here. It could come down here, then pull back again, go down some more, or it could come here, go up, come back down, go up again, go up. All right. That's an ugly picture. I want to like a small intestines or something like that. But either way, if you look at it, it's going in waves. Up, down, up, down, up, down. Never all the way straight down, never all the way straight up. It will take a pause. It will rest. It will meet back up with its EMAs. Depending on your time frame, it might not stay away from. And the EMA, I guess if you look, matter of fact, we can go back and look at it in a second. You'll see the price doesn't stay away from the 20 EMA for too long. Right? So let's take a look at it. Oh shoot, I ain't want that. All right. We look up here at 245, right? Price started to break away from the 20 EMA on a 5 minute time frame. Now at 405, started to make its way back. It didn't touch it yet. But if you look back, price is here, touched the EMA, it got away from the EMA. Came back to the EMA, and we just scrolling back, right? So then it's the next day. This is the trading hours. Here we are at 11 a.m. What does it do? Goes away from it, comes right back to it. Goes away from it, comes right back to it. On the 5 minute time frame, it doesn't seem to stay away from the 20 EMA no more than at the most an hour, maybe an hour and some change. Right? Now, the 200 EMA, it touched here at 4:15 a.m. the previous day. All right, so it's 4:15 the previous day, and it hasn't touched it again yet. It came back close, but I bet you it'll touch it before 36 hours. Watching the daytime, I bet they touch again today though, right? Probably during market hours. So let's see. Here we are again. So at 4 a.m. yesterday. Then at 7 p.m. the day, so it's 4 a.m. Monday. Then 7 p.m. Sunday, 7:10, it touched it. Got away from it, came back, touched it again. If you look at the previous day, right? How long? Rarely longer than 24 hours. If it gets away, comes back to see that price in 200 and the 200 EMA, they come back and meet again. You can look at it and do the same thing with your charts. And because of that, some people play mean reversion. Sometimes they use sometimes they use a Bollinger Band. I don't do mean reversion, but I do look it does play a factor because I say, okay, well, if it's really, really far away and it starts to show me that it's coming back and it shows me this by, all right, so let's say if you can look at price right here, you see price is trending down. Stop here, right? It also stopped here, but it came back to this 20 EMA, halted there, broke back down, came back up to the 20 EMA, but it didn't continue down anymore, right? It started to pretty much hover around that 20 EMA, raised back, went back above it, came back down, and then halted at the 20 EMA, but it didn't go below it. So when I see this, I'm like, okay, price looks like it wants to start. Price looks as if it wants to reverse. If not fully, definitely pull it back up closer to the 200. And this is a pattern that you will see a lot. So it goes back up even further, comes back down, touches the 20 EMA, goes back up, but it doesn't go higher than the previous high. Okay, so now we have an issue. We say, okay, price isn't going higher. Let's see what it does. Then that's when I would draw like a block from the highs here and the lows here and see which way it wants to go. Start to drop below it. I say, okay, it seems as if it wants to continue further down. Also, too, I'm looking at how price is trending. It's trending below the 200 EMA. Ideally, you hear a lot of traders say if price is below the 200 EMA, price is weak. Therefore, you should be looking for a sell. And I agree with that for what I've seen. I mean, you can take buys back to the upside. However, you are fighting the trend. So looking at price here in this particular area, it dropped below, came back down to this level right here. You see this orange line. Price dropped, came back down, came close to it, went back up to the EMA, halted around the EMA, came back, but it didn't get that much lower. You see it rejected, and then it's pretty much equal, right? This area, this area. So when I see something like that, I take a pause for a second. I say, okay, price is equal for the most part. We're not gonna worry about this wick and all that stuff like that. For the most part, price is halting in this particular area. All right, so it seems as if price doesn't want to go down. Then I slowly but surely see price start to climb up. Goes back above this 20 EMA, comes back to the 20 EMA, down to it. It breaks it, but it doesn't break it. You'll start to realize like, okay, how much of a break is price showing that it's still weak, and how much of it is just okay. Price is just stalling in this particular area. It doesn't have to be right at the EMA. EMA is more like a rubber band than like a fence. Right? It has some give to it. See that, and it stops, and it doesn't go below the previous low, which was this area right here where you see this purple circle. Then price starts to move back up. When I see something like that, I say, okay, it found this bottom. And and don't get me wrong, the way crude moves, I would have more confidence in saying, okay, it looks as if it found this bottom. Another indicator, since I don't spend that much, not indicator, I'm sorry, instrument, since I don't spend that much time with any other instruments, and they also move differently, I wouldn't feel that confident because I don't know exactly how they move. With anything, the more time you spend with it, the more comfortable you feel with it. So that's why it's good to, from what I hear and what I'm seeing from other traders, and just start with one. You know, you have enough opportunities. You might not have it every single day, but you will have enough during the week to make a really good living. And then you can always just scale up. Okay? And then you see price start to go back up. So let me erase this. Take this out too. All these damn John. Let's see if my other guess was right. It didn't go all the way to it, so it went close to that line, also to the EMA. Not super close though. I'm not gonna take it. I don't like the way that looks, so I'm gonna wait to see what it does in this particular area down here. Up around this area, I'm gonna see how price starts to react. If it puts in another rejection here, it starts to move back up, then I start to make a decision. Uh-huh. Mm. mm, mm, mm. That would have been too. All right. It's going to take me a little while to get back comfortable getting into my trades, but I could have took that was a pullback. I figured that. I ain't say I called it, all right, but I was expecting it to reach this particular area, right? This blue level here. It came close, and also pretty much probably touched that 20 EMA. Doesn't always touch it, but it comes close. So I could have got in right here on this red bar, this red candle. Got in there, stop loss above. That would have been about 5 points, and down to here, right? But I didn't take that either. That's for my lack of experience, though. So I'm gonna gain some more experience all this month and all the rest, moving forward in general. You know? So within it's 4:30. If I would have came into the market, which I've been thinking about that, like I said, about 2:45, I could have caught this pullback up here, this rejection. If I would have caught that, I could have got a 1 to 3. It could have got a 1 to 3 on this. I would have been done for the day. But hindsight, like they say, is 2020. You can see it clearly when you're looking back. So, but the more experience you get, then you can see it right in the moment. So, yep, I would have been done after those two. But right now, I'm only risking $60 at the most, because it's $10 a tick. And then after I get back into the floor of things and get my win rate up, then I'll double that to, and that's one contract. I doubled it to 2 contracts, and so that'll be risking 120. And so if I 120 times 3 is 360. 360 a day, 10 days, I pass my valuation. So that's the goal. 120 at risk, 122 contracts, 1 to 3. Seems as if that might work. Yeah, dang, look at that. Could have got a 1 to 4. Huh? Oh, look at that. Boy, I missed another one. That's right. What they say, fear of missing out, what they call FOMO, right? FOMO, fear of missing out. So a lot of times that will have traders jump into a trade prematurely with no confluence or no, what's the word I'm looking for? Nothing to really support that trade, right? No evidence to really support it. However, you can be too hesitant and then you miss trade. So you don't want to be on the opposing ends of the spectrum. You want to be somewhere in the middle where, okay, well, I'm not hesitant to take a trade. I'm not fearful. And I don't have the fear of missing a trade. So when I see my trades I take it. But I haven't been in front of the markets in quite a little while, so that would have been a good pullback too. Look, that would have been a good pullback. I would have been done, man. It's cool. So a lot of times I see it starting to wick, and I see a large volume bar. A lot of times that can be an exhaustion bar before it starts to reverse back up, right? For some reason, it'll be a bigger wick and then a large volume bar before it starts to turn back around. So since I mentioned it, let's see if that does happen or not. It's not always the case. It could continue down even more, but it did it right here too before it reversed. So we're gonna see if it does it again on this one. Okay. Okay. Mm. Oh, I guess I was wrong on that one. They still fighting it out. Still trying to drop the price. Ooh wee. That's a good looking pullback too, man. I'm tripping. That's a good looking pullback, boy. That's a good looking pullback. I didn't even take it. That's okay. I don't really get mad. I'm still excited, right? Because I'm seeing things. It's a difference if you don't see nothing, but even if you don't take it, if you see it, that's a good start. Because the next step is taking it. Right? The first step is identifying it. So, mm, mm, mm. Yeah, it's 4:41. I'm gonna go ahead call it quits for this session right here. I'm done with this session. I only have like 18 minutes anyway. It's not going to be another setup for me within that time, so it won't be another pullback. It could be probably right about 5, possibly within 18 minutes, but I missed my best 2 opportunities. Should have came into the market a little bit earlier. That's okay. And then I missed this pullback here. Both of those 2 missed opportunities, those 2 pullbacks would have gave me my 1 and 3s. So I'm gonna call it and come back fresh tomorrow. And hopefully some things I mentioned might help you guys who are just starting to get into the trade. Oh, I'm still halfway asleep. Hopefully some of the things I mentioned point you guys in the right direction, or give you some information that you might want to look into that hopefully might help you guys become better traders and profitable traders if you're just starting. So, all right, I'll check you out tomorrow.